Well, good afternoon, and thank you so much for allowing me to speak here today as this amazing program comes to a close. As you heard, my name is Nadine Chakar. I'm a very proud Lebanese American who these days calls Boston home, but forever will cherish my Lebanese root. It's an honor today to be associated with Tech Minds. I really wanted to bring these events to a close on a high note, but I must admit it's going to be really hard to compete with the caliber of the speakers and the topics discussed today. Thank you all for your amazing and inspiring contributions. So I was asked to briefly discuss the impact of AI on financial services, as well as challenges by young entrepreneurs and other topics. So let's see if we can do this all under 10 minutes. As we all experience, technology is very pervasive in all aspects of our lives. It has transformed how we book accommodation, transportation, plan for our retirement, order takeout, but nothing compares to the overall impact it has on financial services. Technology and finance are intertwined in a way that we've never experienced before. So for all of you out there who want a successful and lucrative career in finance, you better master your Python and Solidity coding skills, as well as you do with your ROIs, your profit margins, and PE ratios. When and how did this all happen? Well, we didn't get here overnight. AI and machine learning and other digital technologies have had a rich history with roots going back to the earlier days of computing. Innovation is not done by one individual, but by generations of innovators. So let's go down a very quick walk down memory lane here. And somebody said this earlier today. The whole concept of AI actually started in the 1950s. That's how far back it goes, when Alan Turing started wondering whether machines can think. Then in the 1960s, we saw research in neural networks and expert systems lay the foundation for future advancements in this field. 1980s and 1990s were a bust. They were actually called the AI winter because people just lost interest. We lost funding. We lost interest in anything related to HR. That is clearly not the case anymore. Right? In the 2000s, we saw the rise of very powerful computing and big data science fueled renewed interest in AI and machine learning. Algorithms started achieving breakthroughs in areas like image recognition and natural language processing. And then we come to today. AI and machine learning are becoming mainstream. In 2023, for example, Gen AI startups secured $21.8 billion in funding. That's across 426 deals. But we all know OpenAI led the way with almost half that funding. Earlier this week, Google DeepMind CEO said that the company will be spending $100 billion, $100 billion in AI. I didn't go to MIT, so I can't figure out how many zeros that is, but I think that's a lot of zeros. And on a very quick note here, there's a fascinating book by Walter Isaacson that recounts the history of innovation. It's called The Innovators, and for anybody interested in this field, it's a great read. I highly recommend it. Now back to our regularly scheduled programming here. So as I said earlier, the impact of AI, machine learning, quantum computing, distributed ledger, their impact on financial services is inescapable. We see the impact in banking, in risk and capital modeling, in automation of client service, fraud detection, and the list goes on. AI does tend to get knocked around for some very publicized mishaps, but in banking, it's had an impact in terms of making credit, for example, more accessible for a lot more people. I don't know how many of you have tried to get a mortgage lately or a line of credit. I tried a few years ago, and it was brutal. The amount of paperwork they needed, the amount of time they talk to you, and you just wait until somebody gives you an answer. Last week, I was having coffee with a colleague of mine, and he was bragging how he applied for a jumbo loan, and within hours, he got his answer. And that is the impact of AI and machine learning, because they have the ability to analyze structured and unstructured data in a way humans just are incapable of processing. That, in turn, opens up more opportunity to people who are creditworthy but have not been given a fair shot with traditional analysis. Insurance companies as well are also stepping up embedding AI and machine learning to underwriting and claim management. Now, the holy grail in finance is called mass customization. It's the ability to offer customized products to fit a client's risk profile, as well as tailoring recommendation for investments and retirement product. Just guys, think of Amazon. They know more about us than we know about ourselves. So as you can imagine, governments and individuals are expressing huge concerns over privacy. It's a funny paradox. On one end, we sign up for the app of the day and voluntarily give away all our data. But on the other hand, when given a choice, we express great concerns using technology, for example, for building a CBDC, which is a central bank digital currency, mainly because of privacy concerns. Now, AI and machine learning require massive data sets to feed learning algorithms. This insatiable need for data has also raised concerns over bias, as we've heard previously. You may recall Google was in the news as well as its AI output was producing images with ethnic and racial biases, as well as unintended and disturbing output. Actually, our previous panelists showed some of these examples. So this has governments right now running all over the place and rushing to introduce new rules and guardrails. Now, the EU, for example, they are a leader in AI regulation, and they're leading with GDPR. They're also working on additional AI-specific regulations. Here in the US, we've got a patchwork of federal and state laws addressing AI, but for now, the approach is more piecemeal. Now, you look at China. China's taken a totally different approach. They're focusing more on AI development to foster economic and technology advancement, very less concerned about individual privacy concerns. Now, we truly live in exceptional times. MIT has reported that actually 25% of its graduates have started new firms. Fintech and digital technology are a game changer for young entrepreneurs and for society at large. We all tend to have these little unicorns dancing in our head when we dream of founding a new startup. But I promise you, it's not easy by any stretch of the imagination. Research shows that 9 out of 10 startups fail, and young entrepreneurs have even bigger challenges to manage. So in addition to the guidance and advice shared by Paul earlier this morning, I wanted to double-click on 2 factors. One is limited access to funding. Money isn't cheap anymore, so securing funding usually is a major hurdle for young entrepreneurs. Traditional banks are usually hesitant to lend to startups with no track records, and now VCs are looking for ventures with higher growth potential. Now, if you're launching something in AI, chances are you'll get funded. But most importantly is building a network. Connections are crucial for any business, and when you're starting out, it's hard to have the networks needed to open door, secure partnerships, and secure funding. This is where organizations actually like Takrim and Life, for example, can help you with these valuable connections and resources. Now, if it wasn't hard enough, disrupting financial services has its own challenges. Now, I'll just give you 2 good examples to keep in mind. As bankers, we tend to whine about regulations all day long, but we do love them because they present high barriers of entry. Young entrepreneurs need to navigate a very complex and legal regulatory landscape. The other piece is, and that tends to be tedious and costly. Competition, too, from established players can't be underestimated. Financial services industry is dominated by large, well-established institutions with significant resources. It can be very difficult for young startups to compete on brand recognition, product offering, and customer base. But with all that said, financial services are so ripe for disruption. Just call your bank and try to get an answer, right? And we have seen some spectacular success in these areas with companies like Stripe, Chime, Robinhood, and Coinbase, just to name a few. Now today, we're gathered here today thanks to the vision and ambition of Ricardo Karam, who established Takrim to highlight Arab achievements, to uplift Arab youth, and promote entrepreneurship among his other noble aspirations. So it's only fitting to close my brief remarks by reminding us all that the Arab world has had a rich history in financial innovation dating back centuries. So let's take the Hawala system, for example. That predates Western banking. It relies on trust and network to transfer funds without the physical movement of cash. Does that sound familiar to you guys? It sounds remotely akin to the blockchain networks of today. Our ancestors also introduced bills of exchanges, which is a precursor to modern check, and of course, Sharia-compliant banking. This is just a simple reminder that entrepreneurship and innovation is an integral part of our DNA, of our culture. It's in our blood. You heard earlier, Sami, Eddie, Fadil, and Maher all reiterated they didn't know what entrepreneurship was, but they were driven by it. So over these past couple of years, we've witnessed the surge of fintech innovation by Arab Americans at large, and specifically in the Middle East. Arab entrepreneurs are leveraging AI, ML, and digital technology to create new financial solutions. For the sake of time, I'm not going to go through them, but I do want to give you two examples. One is from Saudi Arabia. It's called Yaqeen, and it's an AI-powered platform which uses machine learning to assess the creditworthiness, let's try to say that 5 times, for individuals in small business, particularly those without a traditional credit history. This promotes financial inclusion by offering alternative lending options. And in Dubai, we've seen something called Beehive. It's a peer-to-peer lending network that uses AI and blockchain technology to connect borrowers and lenders directly. It offers alternative financing options for businesses and individuals, bypassing traditional banking channels. I think we may need to try that in Lebanon. But here we go. So these are just a few examples among many. The Arab world's fintech landscape continues to evolve rapidly. Let me put that in perspective. 2023, I don't know if any of you were trying to raise money, it was a brutal year for fintech. Worldwide investments in fintech startups fell from a record of $141 billion in 2021 to $39 billion in 2023. In the UAE, however, we saw that go up to 92% increase in total fintech investments. Now, albeit from a much smaller base. So as technology advances, we can expect even more innovative solutions that contribute to a more inclusive and efficient financial systems, and I expect more Arab Americans and others to make a significant dent in moving the world forward to a better place. So I'm going to close by citing a quote from a famous Arab American, Steve Jobs. Okay, I know I'm taking some liberties here, but hey, he's part of the tribe, Nalaili. So Jobs is famously quoted saying, "The people who are crazy enough to think they can change the world are the one who can do that." So thank you again for this opportunity. I think baby Audrey's gone, but to her and to all our young entrepreneurs, go out, dream big, and seek out your own adventures as you change the world. We will all be better for it. Thank you.